Welcome back to another video, guys. Now that we have gone over the basics of futures trading, we have gone over how to get funded capital. Let's talk a little bit about the strategies and how do we actually place these trades when it comes to the execution part of things, okay? Um, the two indicators that I use when I make my future decisions are VWAP. So we have already gone through the VWAP line here on previous videos. And then the second thing is going to be the Fibonacci retracements, which we have covered a little bit when it comes to the indicator section, but we haven't gone into how do we actually use this for execution wise. I don't use this mainly for options trading, but I do use it for futures heavily. So the first thing is how do you set up the Fibonacci levels, just like I have them here, because once you use them as a default, it will not be like this. You're going to have different levels. So the ones that you want to have on your charts are going to be the 0 and the 100%, which are going to be your two connecting lines, the high and the low, or the low and the high, depending if you're uptrending or downtrending. And then you're going to have three levels in between, the 61.8, 50%, and then 38.2. And then you're going to have two levels above those, so negative 23.6 and negative 61.8. Depending which platform you're using, you should be able to customize this. If you are in TradingView, you can literally right-click, click settings, and then you can turn on and off any level that you want, and also put any numbers that you want right here as well. So this is my customization right there. This is the only levels that you would need to use for our future strategy. Okay, so that's all you need. Again, Fibonacci retracements, the VWAP line, and then obviously volume and price action. So that's really it. Again, just like we've gone through the Fibonacci extension video, what you have to do is basically find the trend. That's your first thing to do. Find the trend and then connect the trend highs and lows, right? So if you're uptrending, you're going to click first, and then you're going to click second at the trend high, and then the inverse if you're going through on a downtrend. Okay, they work for any type of time frame, guys, and any type of market. Even though we are going to be specifically focused on the smaller time frames, the 5 minute and 1 minute, you could use this for any type of time frame that you want, daily or 4 hour. It really doesn't matter, and then any market as well. So going through just a simple example here, you're going to have plenty of examples, guys, of trades, like actual trades. Now we're just going to go over, how it works, how to prepare for it. But we're going to have specific examples on actual trades that we have taken in the group chat with this specific system. Okay. So focusing on this specific day, we know that we have an uptrend happening here in the morning up to here, right? So we have the trend low and trend high. What do? We click the Fibonacci tool, we click the high, and then we click the low, and then we click the high right there. And that's your Fibonacci levels that you'll be using, okay? Now, what the system entails is this. You want to miss the trend, right? Because there's no way you can capture this Fibonacci because these help on pullbacks. This is a system that will be a pullback type of system, not a breakout system. You're entering on the pullbacks. And what you're actually looking for is to miss the initial move and then to wait for that pullback and take advantage of the pullback, right? Again, we have the uptrend right here happening. Let's say we missed that, right? You have the uptrend low and then the uptrend high. That's your connecting points. And then the zone that you are going to be buying at is when it touches the 50% Fibonacci level. Okay, that's your buying level. And then you're using the 61.8 as your stop level. Okay, and then for profit taking, you have three profit taking levels right here, which if all of those three hit, it is called a fib completion. Okay, so if it hits all those levels, the Fibonacci retracement move has already completed its expected move based on our system right here. Okay, now a couple of things here, and as I said, we're going to go over a lot of examples and a lot of scenarios, but the 61.8 can act as a stop loss, as a hard stop loss, or as a mental stop loss. That's really up to you, and it really depends on one, the volatility of the market that you're entering in, and two, the confirmations as well. So you might be thinking, where does the view up come into play? The A plus setup here happens when the 50% is a view up area as well. Okay, so the view up is right here and the fib is right here. So it's a little bit far apart looking at it right now. So it is not an A plus setup. We're gonna go over like A plus setups and what's um, actually a really, really good pullback to enter. But in this example, it is not the best for a couple of reasons. One, we have already broken the view up here, right? And two, the 61.8, if you added this hard stop loss, you would have gotten stopped out there. Okay, that's kind of the things that are not looking right on this particular setup. Okay, but this video is just so you have an idea of what you're actually looking for. Now, there's a couple of ways to enter as well. So we have two ways to put a stop loss, right? So we have a hard stop loss. You're like, okay, 61.8 is going to be 26.5, and that's going to be my stop loss. Okay, and then you actually put the order there that if it hits the 26.5, it will stop you out automatically. And then you have the mental one, and you see how the price reacts there. If you had the mental one, you would not have gotten stopped out here because it closes above it, and you would not have gotten stopped out here because it closes above it here and above it here, right? So mentally, you would have stayed on this play for literally the whole day. It was one of the slowest day in the season. So I'm recording this video, guys, the last week of the year. So obviously, it is a slow week for the Nasdaq and all the other markets. But being patient, you would have completed the full fib sequence at almost at the end of the day there. And again, we have two ways to enter as well at the 50% retracement. One, we call it a touch entry. What does that mean? That you're actually placing a limit order. For example, in this example, at 17,033, even before the price gets there. So you're placing that order when your price is here, you're already placing it at the bottom. So when the price gets there, it automatically fills in the order, okay? And the second way to enter is a confirmation entry, right? So you wait and see how the price reacts there. You wait for buyers to come in, and then you take that opportunity. So there's benefits, and I mean, there's advantages and disadvantages to both of them, right? Because because there's times that the 50% retracement works so well that it literally goes, touches it, and then the next second it just shoots up, right? So in those examples, it makes sense to do a touch thing, right? But I would only do a touch entry if I have double confirmations, which is another thing that we're going to talk about. And double confirmations, I mean, looking at volume, looking at the view up, looking at any other type of indicator or even price action, reading, supply and demand zones on the chart and understanding, okay, if it's a key level or not. And if you have, our other indicators, guys, such as our automated levels or our view up lines, use those as double confirmation as well. Okay, that's when I would enter a touch entry. And when I do a touch entry, I would place the 61.8 as a hard stop loss. I would place it because there might be times that, it just continues going lower, for example. But let's zoom in here on the 1 minute as well and just understand what's happening on the 1 minute at that specific moment in time. Right? So we go and touch the 50% right here. If you did a touch entry, you'd have gotten stopped out. Okay? If you do place a hard stop loss here. But if you waited for a confirmation, probably my entry point would have been this candle right here. As soon as I saw that it held a 61.8, and as soon as I saw this candle as well right here, that would have been my entry right here. Okay? This would have been my entry candle. But again, not the right example right here. We're just showing you how everything works, and even look at an imperfect example as well. We're gonna have almost 10 examples in the next upcoming videos, so you guys can look over them. But in this example, it held a 61.8. the moment, guys, the moment it breaks below the 61.8 and actually breaks, that's the moment when you delete these lines because the uptrend has already failed, right? So we are in uptrending up to the 61.8. As long as we're holding the 61.8, buyers are still intact. They're holding the uptrend. As long as it breaks, you delete these lines. And what you do is you flip the mentality and start another Fibonacci sequence. So basically, we delete these, and then you start another one from this top to the low, depending on where we are, right? So in this example, we wouldn't have done it because it held the 61.8. But if it broken, that would have been our next step moving forward. I'm just trying to explain as much as possible so you guys are not stuck in the scenario that we haven't covered. Okay, so in this example, let's say you had the mental stop loss and you held it. Where would we exit? Okay, depending if it's a scalp or a day trade, you could, be happy with scalps and take profits here at view up and take profits here as well on this move. But if you are doing a day trade and you are sticking to the Fibonacci levels right here, your first exit would be right here, right at the high of the uptrend. And as you can see, we had a pullback right there at the eye of the uptrend. That's your second entry, and then your full exit is right here. Okay. Now, obviously, as soon as you make your first entry, your stop loss moves from here, right? So you're not having the stop loss again here. You could put the stop loss at break even, or you could move it higher as well, just to protect those downside risks. And anytime, like if you, for example, sell again here, you move the stop loss to the next level here. And if you sell for another one right here, you can move another stop loss here. Usually this will be your final exit, so there's no stop losses, but let's say you want to hold a runner or two, that is your full exit at that moment in time. And again, that is a full completion. I really like the scaling out system, guys, just like we've talked about it through options as well. I'm more of the person that likes to scale out rather than scaling it. I'd rather find the perfect entry, right? I mean, there's no such thing as a perfect entry, but finding an entry that I'm waiting for and it has all the indications that I'm looking for. Okay, so as perfect as it can get. So I wait for that, enter a full size position that I'm comfortable with, and then I just scale out, right? Because again, you can never catch the top of an uptrend or the bottom of a downtrend if we're going short. So that's why I scale out and wait for an anticipation of higher moves or lower moves if we're on a short position. So the last thing that I want to cover right here, guys, is going to be the risk management factor when it comes to entering once and then exiting once, right? So all in, all out. Okay? Here's how the risk would look like. And this stays the same because the levels are technically the same. No matter how big of an uptrend this is, the levels, the ranges stay the same. They get wider, but in terms of like percentage-wise, movement from each other, they're the same. So this is the risk that you're looking at. Let's put the risk and reward tool here. Let's say you're entering on the touch. So the 33 level right there. That's your entry, and then your stop loss is going to be 26.5 right there. So these are going to be your risk and reward points. And again, entering all in, all out, I wouldn't consider the high of the trend and all in, all out. I'd wait for either your first, this is what I call a first target and a second target. This is more of getting risk off the table. So if I do the first target right here, which is 73.5, as you can see, guys, you're looking for a 6. So it's a 1 to 6 risk and return ratio. Okay? I would only do this if you're entering with, 1 or 2 contracts and you can scale out properly. This is the risk and reward that you're aiming for. 1 to 6. And then if you're hoping for a full FIB completion, which is 94.5, it is 9.1. So 1 and 9 risk and reward. Okay, so you would do any system you like, guys. If you like a lower risk and return, but has a higher win ratio, you could do that, right? You could scale out and you know that you're going to win more trades because not every setup is going to go to its full FIB completion. So you have a higher chance of failure looking at these, right? But it makes up for the risk and return, right? So even if you fail uh, um, more than half of your plays, you're still looking good, right? Because you have a high risk and return ratio. But let's say you want to have a high win ratio, then you might want to scale out just like I do, right? I rather scale out and have a risk and return ratio 1 to 2, for example, even 1 to 1 sometimes on the first trim. But I win more trades, and that's what you're doing. Uh, this is when you enter more contracts, and this is what you do if you're entering with 1 or 2 contracts. Again, higher risk of failure, but you're making up for those losses because of the high risk and return. And again, guys, no matter how big of an uptrend or downtrend it is always going to stay like this, always. So I wanted to show you guys an example on a bigger time frame as well. So here we are on the 4 hour, and you would use bigger time frame, guys, if you are preparing for your day trading and want to understand the bigger picture. Because if you're trading it through a prop firm, for example, they won't let you keep positions overnight unless you close the position at 4:15 and then you reopen it at 6 and then hold it through the night. You can, but you're gonna have to do that every day, which is a bit hectic. So looking at this NASDAQ example right here, we have a uptrend that starts here at this bottom. I mean, technically, obviously, the uptrend starts here, but there's no pullback that happens, right? So if I do this, so there. I mean, technically, it looks like there is an opportunity there as well, which I didn't see before, right? So technically, there is this pullback, which you can take advantage of, full FIB completion. But I wanted to talk a little bit more about something that's more bigger picture. Actually, if you do a full uptrend, there's no pullback that comes down to the 50 until this new trend that starts here. And I would start a new trend at that moment in time. So start their new trend, start to the highs, and until you see a pullback down to the 50, right? And this is the new high. Okay, so this is where that uptrend kind of ends because you're moving that as time goes by. So let's say you are here, right? So you're moving until you actually see a retracement back to the 50. There's no indication for you to open a position until you see a pullback down to the 50, which never happens until this point, which is a perfect example of what we talked about of a touch entry, right? Because it literally touches that. Let's see what the low is there. It's 21.25, so it's 1.50 away, right? So that's the perfect touch entry. And as you can see, it works pretty well, right? It works pretty well. For some people that probably waited for this gap to get filled, they failed to execute on this bounce play, for example. But because you had the 50% retracement there, you already had the stop loss locked in, you're on this position, or at least you know that you could be expecting a move higher on this position. And as you can see, as soon as the full FIB completion hits, you have a huge seller pressure day right there. And then here again on that pullback, but again, as I said, as soon as the full completion finishes, you would delete these levels. No matter if they work in the future, I would delete them personally, right? So again, it works on bigger time frames as well. And again, any type of market that you're looking at. If you have access to our VWAP indicator, guys, because I know not all of you have, it's a select of you guys that have access to, definitely use those VWAP lines as double confirmations. Definitely use the anchoring tool for confirmation as well. If you want more information on that, definitely feel free to email me and we can do a strategy call on how you could use that to your advantage with this system and with the examples that you're going to see in the next few videos. And if you don't have access, guys, to the VWAP indicator, definitely email me and we can talk about giving you access to that system as well, which in my opinion the combination of VWAP with Fibonacci on futures, it is a bulletproof system. The only thing that you have to do here is wait, right? Because you're waiting for the pullback. You're not, like, for example, here, you're not taking any type of action on this whole thing here. Or the one example that we went over on the 5 minute, right? From today, it's again the first opening trend right here. You're not taking any type of entry here because there's no pullback that happens. Even if I go on the 1 minute, right? So let's say we're going by our day, and let's say this is what we have right here. So there's no pullback that happens because I wouldn't do a fib on the first candle. There's no trend yet. You want to see a trend get formed, and I would only see a trend formed up to here. So this would be where I first place my fib. Comes too close to it, it doesn't touch, so no entry. And then moves higher, then I readjust my fibs here. Does it come to the 50? No. I readjust again. Does it come to the 50? No. And I readjust again. Does it come to the 50? This is where I get interested, right? This is my interest zone. And obviously we went over this example, but before we get into the specific examples, guys, with the trades as well, the last thing I want you to keep in mind is there will be times that there will be a bounce that happens even before the 50 hit. So I think we saw something similar happen here. So this right there. I would only take such a thing if it's very, very close to the Fibonacci 50% level. In this example, it was what? It was almost 2 points away, a little bit less than 2 points, right? Could I have taken this? Probably, right? So 2 points. 2 points and lower, I would have taken it, even though it would not be the A plus setup that I'm looking for. I would have taken it as just because it is close to the VWAP area as well, right? That's my only thing that I could have taken. But again, we're looking for those A plus setups, and this would not be an A plus setup whatsoever. Okay, so play around with this, guys. See if you could have open positions based on this. Definitely use, again, the VWAP in combination and any type of tool that you have there, right? So it could be the lines, the levels that we give you guys, the automated ones. It could be the VWAP indicator that we have as well, or any type of other thing that you're using out there. We went over upside examples on this one, but as we go into the trade examples, you're going to have some of them that are to the downside as well. There's micro fibs as well, like this one, for example. I could probably see it just by my eye that it is a Fibonacci rejection there, right? So if I click here, and then this is the high of the day, connect it here, and that's my Fibonacci rejection. Only move lower. So when people are getting excited because they see this candle, and then this is probably looking good until the close of it that closes like this, and they're getting FOMO because they see this move happening, you're waiting for this rejection to happen. Like, that's why you're waiting. And again, two ways that you could enter this. Either you enter in the touch, as soon as it touches, boom, and your stop loss is very tight. In this example, it's only 2 points. So it's very, very tight stop loss when it comes to the NQ. And the risk is pretty low, right? It's 2 points. Looking at the return right here, which is pretty high. Again, I don't like taking positions at the end of the day, usually the last 10 minutes, but I'm just showing you guys as an example. We're going to go over the ones that I have taken with the group on voice chat and some that I have taken personally as well. And this is a full fib completion, right? It goes up to here, and it's a 1 to 9 as we went over risk and return system. So it happened pretty quick here, so it was just a matter of so from 53 6 minutes, right? 6 minutes, you're making a 1 to 9 risk and return play, right? You're risking 2 points to make, what is it, from 02 to 81? Is that 21 points there, right? So you're risking 2 points to make 21 points potentially. You don't have to hold until the full flip completion, guys. But if you're entering with 1 or 2 contracts, that's what I would aim for mainly. If you're scaling out like I do, then you have your targets set. Thank you, guys. I really love this system because, one, you could use it for double confirmations with other tools. Two, there's no FOMO into this because you're waiting for the pullbacks. You're not entering on a breakout, you're not entering on an extended move. You're waiting for a pullback to happen. And three, it already gives you the stop losses and the profit target. So there's no more guessing, okay, where should I exit and so on. It's already given to you. The only thing, guys, you have to be able to identify trends. You have to be able to identify trends and identify them quickly. And last again, first entry was a touch, and the second entry would have been this candle probably here. So you waited for this to happen, which shows indecisive buyers and sellers, similar to a doji that we have gone over. You're waiting for a seller pressure to come in, and you're entering here, right? That's your confirmation entry. I hope this video explained a lot, guys, what we're going to go over in the next few examples. Definitely rewatch it if you are feeling unsure, if you understood it all. Everything you need to know is in this video. Next few videos will be examples only and trade executions, right? Similar to the trade execution videos that we had over for options, but they will be a little bit shorter just because you already know my thought process by now. You already know how I'm thinking about specific trades. Now it's more about, okay, understanding this new system that we use for futures. I'll see you guys on the next video.